Hey, I know everybody keeps talking about affordability and trying to buy a house. I get that. Prices are going up. Saving for down payment gets difficult. Affordability worries keep qualified buyers on the sidelines, and the media keeps telling you you need 20% down. Not quite sure why they keep telling you that, because that's just not true. Your rent keeps going up. As your rent goes up, it's harder to save. Again, the 20% down payment on a median Michigan home is tens of thousands of dollars. Saving $300 a month would take you almost 3 years just to reach that $10,000. Closing costs and reserves add thousands more on top. You're not short on income, you're short on cash, and you're short on time. So today we're going to talk about the MSHDA down payment assistance programs. This is a program that is that covers all of Michigan. It's a down payment assistance program that the state of Michigan sponsors, and I've been using this program for over 30 years to help people just like you be able to purchase a home. So let's talk about what is MSHDA. MSHDA is the Michigan State Housing Development Authority, which helps Michigan residents move from renting or living at home to owning through affordable mortgage financing and down payment assistance. Their mission is to expand homeownership in the state of Michigan. They pair their down payment assistance with a competitive first mortgage with real assistance at the closing table. And they help bridge that gap to turn qualified renters into owners years earlier than you would if you were saving on your own. So the down payment helps. So MSHDA offers up to $10,000 in down payment assistance. This will go towards your down payment, closing costs, prepays, and escrows. The first mortgage is a fixed rate 30-year, and the first mortgage can be a conventional FHA or a rural development. Unfortunately, VA does not allow these type of second mortgages. Savings are preserved. Buyers keep reserves for moving, furniture, and life after closing. Anybody who knows anything about owning a home, and if you don't know, ask people that own a home. There's always something to be fixed, something to buy. Doesn't matter whether it's new construction or the house is 50 years old. So the down payment assistance itself is a second mortgage. It is a non-interest bearing 0% interest second mortgage. There is no payment. It is not a grant though, it's a loan. So the second mortgage will get paid off when you refinance the first mortgage, when you sell the home, or if you no longer live there as a primary residence. So if you move on, you have to be there for at least a year. But if you move on and buy another house and you turn this house into a rental, you'll have to pay off that refinance and pay off that second mortgage. So who benefits most? First-time home buyers. Obviously, it's designed for first-time home buyers, available statewide to buyers who have not owned in the past 3 years. Now, there are a lot of areas in the state that you do not have to be a first-time home buyer. You just can't own another home at the time of closing on a MSHDA loan. Young professionals, solid income and career growth, but a little short on saving money. Families with limited savings, and they have stable earnings, stable rent history, but there's just not a lot left over at the end of the day. And then buyers who think they can't. There's just a lot of people out there, a lot of people I talk to that just say, well, I can't afford it, or it's not the right time, until we actually run the numbers. And then they're often surprised. So how does it work? There's up to $10,000 as a second mortgage, as we've said, zero interest with no monthly payment, layered behind a MSHDA first mortgage. So you got a first mortgage, and then you got a second mortgage that gets recorded on title. The real obstacle is the cash to close. It's usually not income, and somewhat not credit. It's usually just not enough money to go around to get to the closing table. So a new conversation. So instead of coming back when you've saved more, let's go look at homes now. Find out where you want to live, what you're looking at, what you qualify for. See how much that really costs, and how much the MSHDA and how soon the MSHDA program can get you into a home. Every dollar of assistance is a dollar the buyer does not have to save. That's the difference between buying this year and buying years from now. $10,000 maximum assistance, 1% minimum buyer investment. You do have to have at least 1% into it. It can be your money or a qualified gift. Again, zero interest on the down payment assistance second mortgage, and the monthly payment on the down payment assistance is $0. So buyer qualification for 2026, the maximum purchase price is $566,355. Household limits to apply. It varies by location of the home and household size, how many people will be living there. Minimum credit score is 640. Maximum debt to income ratio is 45%. This is for primary principal residence only. It cannot be for a second home or an investment property. It can be a single family residence or a condominium. You cannot use this for a multi-unit. And the first mortgage will be either a conventional, an FHA, or a rural development. So let's take a look at the trade-off. You've got that second lien. So assistance is real money. It is a lien, and buyers should hear this clearly up front. It builds trust and prevents surprises later. So let's take it, for instance, $250,000 purchase price. If we're using a conventional mortgage at 3% down, the mortgage amount is $242,500. Now we've got a $10,000 second mortgage. So at closing, you're going to owe $252,500. So you're going to owe more than what the house cost you. This will impact your ability to refinance. When you refinance, you need to have a certain amount of equity so that if we need to roll the costs in, we can do that. So you don't have to pay the closing costs all over again. You'll be able to refinance, but it's just going to take longer. You need to be able to build up some equity. Or if you can, you'd have to pay off that second mortgage at closing. So what does it mean? Combined liens can exceed the home's value in the early years, so there's little or no equity at first. A refinance must pay off the down payment assistance amount in full, which raises the payoff amount. It takes longer to reach that loan to value that a refinance requires. Appreciation and principal paydown closes that gap over time. And we have to set these expectations now. We can look and see, okay, depending on where you are, how much more and how much you're going to owe at the end of the day, what we think the appreciation rates are going to be, how long do we think it would take to be able to refinance, given that rates are favorable at that time. So the trade-off is own a home years sooner and refinance a little later. So let's look at the myths versus the reality. So MSHDA buyers are not strong buyers. That's not correct. If you are a fully underwritten, pre-approved buyer, then you are qualified. Doesn't matter what program you're using. You have to have the 640 credit. You can't go over 45% max debt to income ratio. We're going to verify income and assets. And with MSHDA, there's no wiggle room. There is no gray area. Either you fit into their box or you don't. The myth is that you can't compete. Plenty of my MSHDA buyers compete just fine. I actually get on the phone with the listing agent and explain to them that you've been fully vetted. We've done a full pre-approval. We know exactly what we're looking at. The process is too difficult. No, the process has gotten a lot better over the years. Yes, there is a second underwriting. We're going to underwrite the first mortgage, approve that, send it off to MSHDA. They take 2 or 3 days to underwrite on their side. Once they'll either approve it or ask for some conditions. Once they get that and approve the loan, they send it back. And then we do a final look and do a clear to close and schedule the closing. It doesn't take forever to close. It used to take a lot longer. We're still closing MSHDAs in 30 to 45 days. So how do we make you a competitive buyer? A strong pre-approval, fully documented, credit reviewed before you go look at a home. You're going to have to take a first-time home buyer class. Clear expectations. You're going to know exactly what the cash to close and the monthly payment on the home you're looking to buy. And tight communication between you, your realtor, and the listing agent. So using a MSHDA loan is just like any other loan as far as timing. Buyer consultation, we're going to talk about where you want to live. Is this going to be a forever house, a relatively short-term home? I will tell you with MSHDA, because of that second mortgage, if you're going to be in and out in 2 years, it might not be a good idea to use a down payment assistance program because you're going to have to make up that difference when you sell the house. We're going to get you pre-approved, again, fully vetted pre-approval. Once you know how much you qualify for, we're going to set the cap that you want to spend, not that we can qualify you at. Go out and look for a home. Find a home that you like. We're going to do a deep dive on that house, find out exactly how much it's going to cost to close, what the payment is, and then what next year's property taxes are going to look like. Put the offer in. I will call the listing agent and go through the offer with them. Make sure they understand what we're doing. The offer's accepted. You're going to do an inspection, and then we'll order an appraisal. We'll put you through processing and underwriting. Once we're done, we'll send you to MSHDA. MSHDA looks at it, sends it back. We'll set the closing, and then at closing, you get the keys to the house. So your competitive advantage as a buyer is you're going to have complete financial clarity, which you will become a confident buyer and a successful homeowner. Clarity early in the process is what keeps deals together at the closing table. You have to know the numbers. If you have any questions about this program or any other programs that we offer, please feel free to give me a shout. You can text me or call me at 248-705-8431, and I'd be more than happy to talk through this with you. Thanks a lot.